let's talk a little bit about what the president told Joe. Just this idea of additional tax cuts coming. I was thinking this was something that you were gearing up and potentially thinking of if there's another 4 years, that would be something happening now. But the president has since said that this is going to be something that's probably coming to Congress in 90 days. Can you explain a little bit about what this plan is and how quickly you think you can move forward on it?
Sure. Well, let me first just put this in perspective, because there's no question that the president's economic agenda is working. The combination of tax cuts, regulatory relief, and now trade, getting the 2 big trade deals done last week. And the president has asked us to start working on what we call Tax 2.0, and that will be additional tax cuts that fuel the economy.
What will they look like?
Well, there'll be tax cuts for the middle class, and we'll be also looking at other incentives to stimulate economic growth.
Can you give us any hint as to what that is yet? Or still early?
I won't preview them here today, but again, they'll be focused on items that will increase economic growth.
Why looking at the middle class as tax cuts for there right now?
Again, I think the president feels that we need to continue to incentivize the middle class, that their taxes have been too high historically. We had big tax cuts already, and that's an area we'll continue to look at.
This is all happening as the deficit looks like it's crossing some new high levels. How do you kind of look at that? When do you expect that deficit will be tackled, and how are we going to do that?
Well, that's a good question. And let me just step back for a second and comment on the first tax cuts, because I stand behind my comments that the tax cuts will pay for themselves, despite the New York Times disagreeing with me today. We've tracked the numbers. We're right on track for the first 2 years. Again, what we've said is kind of with the appropriate growth, and we're running above those numbers, that we'll have in excess of the $1.5 trillion that was the static cut. Now, let me just say, aside from tax cuts, we also did have increased government spending. And the reason for that was the president felt it was important to rebuild the military. It had been underinvested. And to get that done, we had to agree with the Democrats to increase non-military spending. So if you look at the increase in the deficit, a significant component of that is additional government spending. We did a bipartisan deal this year, but there's no question we need to slow down the rate of growth of government spending, because we can't sustain these deficits growing at these levels.
But can I just put a fine point on that? So given the additional spending, you still believe that on a 10-year run rate that we will be flat or better in total as a result of those tax cuts in terms of revenue in to match what also was the additional spending?
No.
So without the additional spending, because I think that's where a little bit of the debate is.
Put the spending aside, and when people focus on the deficit this year, okay, what we've said is the tax cuts, which were $1.5 trillion over 10 years, again, front-loaded with things like capital expensing. So we've never said that kind of in year one, the president's absolutely correct. Revenues are higher, so we're talking about higher revenues. But as we look over 10 years, we're 2 years in. We can monitor this every year. We're following our projections, and we think it will pay for itself. Now, that's different than you can't spend the money on tax cuts and spend the money on increased government spending. So over time, we need to slow down the rate of growth of government spending.